Alrighty, let's begin with a hands-on tutorial with me, just like if you were in class. So I ask that you go ahead and print the Excel template that is on Blackboard that accompanies this module. We'll be looking at page 74, exercise number 13, and we are going to walk through recording transactions into the accounting equation, walking through each separate transaction and seeing what we come up with at the end. All right, the problem says Handyman Services was founded on January 1 and entered into the following transactions during January. They issued common stock, so therefore you know that something is going to go over here in common stock. And we issued it in exchange for cash. So we're also going to go ahead and impact cash. Okay, so let's go ahead and do that. Keep this all clean here. All right, so we're going to increase this by 30,000. And yes, my messy writing because of the big fat pen. Increase that by 30,000. And then let's go ahead and add 30,000 to common stock. What you do to one side of the equation, you do to the other. So I increased assets and I increased equity. Both sides of the equation, the equal signs, 30 equals 30. That's transaction number 1. Transaction number 2, we purchased an old warehouse. So we know that that's going to be property. If you look over here at property, and we issued it for $50,000 of a note. So we know it would go here. So in this case, we're going to increase this by 50 and increase the notes payable by 50. Now, we could have gone down a line and made it, but because they weren't interacting it, I just put it on the same line. You're going to have a homework assignment problem where they're going to have you put it on separate lines, but very similar. All right, we're still in balance. This side of the equation equals 80, and this side of the equation equals 80. When I say this side of the equation, the side of the equal signs. Now we purchased a truck for cash, so we're going to add 15,000 to the truck. Now this is one of the examples where we don't do one side, what you do to the one side of the equation you do to the other, with the exception of when you exchange one asset or liability for another. In this case, we're exchanging the asset cash for equipment. So nothing changes on this side of the equation. The equation is still 80 on each side. Okay? All right. Next, purchase shop supplies for $5,000 on account. So in this case, we're increasing supplies by 5,000. Anytime you see on account and the word purchase, it will always go to accounts payable. We are buying it on account, like a credit card account. So we're going to go ahead and increase accounts payable on this side of the equation. Anytime you see purchased on account, you're always going to go to accounts payable as one of the accounts. All right, number 5 says we provided services of $13,325. We received $12,200 in cash. So in this case, we're going to put the $12,200 of cash we received. We also had services. At this point we're going to go ahead and put these services in retained earnings for now, because that's holding our revenue until we move on and expand that. And so right now we notice that we are short by $3,125, I believe. Let's double check that on our calculators. That we're currently out of balance. So if we go ahead and we look at our calculators, we have 15,325 minus 12,200, which means 3,100 $3,100 $3,125 is going to go to accounts receivable. Accounts receivable is when people owe you money. Accounts payable is when the company owes someone else money. So in this case, we got revenue of $15,325. They gave us cash, and then they owe us the balance. And that's the way we would record this transaction. Next, we paid $1,000 for advertising. So we're going to pay, when they say paid, you're going to assume you used cash. Over here under retained earnings for now, we're going to write advertising, and we're going to write $1,000. Okay? And we're going to subtract that. Remember, what you do to one side of the equation, you do to the other. So in number 7, we received $31.25 of cash for what was owed us. So this is going to be a minus, because now they no longer owe us money, and we're exchanging one asset for another. Next, we paid $4,000 for what we owe over here in number 4. So we're going to decrease accounts payable. What you do to one side of the equation, you do to the other. Here we paid out dividends. So we're going to go over here. We're also going to put that in retained earnings for now. Paid in employee salaries of $4,000, so we're going to pay those. Again, we're going to take that out of retained earnings. Remembering that retained earnings holds net income, which is revenue minus expenses. So we're keeping those kind of in that bucket for right now. In number 11, it said we billed customers for $3,500. Anytime you see that, you will always go to accounts receivable, and you will go to revenue. Revenue of $3,500. And then we paid $100 interest on the note. Also would go to retained earnings. So let's go ahead and see if our equation still balances. Let's do the easy ones first before we go to cash. So we know these two, $31.25 minus $31.25 is 0. So the balance here is $3,500. We have $5,000 in supplies. We have $20,000 in property, plant, and equipment. And let's go ahead and calculate the balance that's in our cash account. So the first thing we're going to do is we take $30,000 plus, minus $15,000. Okay, plus 12,200 minus 1,000 plus 3,125 minus 4 minus 1 minus 4 minus 100 gives us, you guys double check it too, 20,225. And obviously you can pause it during any of this calculation. So now let's go to the other side. We have 5 minus 4 gives us 1,000. We have a $50,000 note payable. We have 30,000 in common stock. And then our retained earnings, we need to do the same thing. We have 15,325 minus 1,000 minus dividends of 1,000 minus salaries of 4,000 plus 3,500 of billed to customer minus 100 gives us 12,725. Now what we have to do is let's double check to make sure that our equation balances before we go on. Okay? So if we go 20,225 plus 3,500 plus 5,000 plus 20,000, oh, I'm sorry, I believe that this actually is supposed to be 65,000. So it's good that we know that. 65,000. Okay. So let's go ahead and try that again. 20,225 plus 3,500 plus 5,000 plus 65,000 equals 93,725. Let's go to the other side. We have 1,000 plus 50,000 plus 30,000 plus 12,725, and we get 93,725. So we balance, which means we're ready to go on to the next step if we were to take this a little further. It also asks you in this question, what is calculate handyman's net income for the month of January? So we know that net income is revenue minus expenses. So let's go see if we could pick that up. Here's revenue. This is an expense. This is an expense. This is revenue. And this is an expense. Dividends is not an expense. And remember, it goes on the statement of retained earnings, not here. So if we were to go ahead and do this, we should come up with net income of $13,725. If we added up the revenue and subtracted the expenses, you do not include dividends, you would come up with net income of $13,725. So now I'm going to let you go try it on your own with Cengage. Cengage has a problem in which you're going to go ahead and do this. From this equation, you could also prepare the financial statements, correct? All of these items are balance sheet. From here, you were able to pick up the income statement, and then you would also be able to prepare the statement of retained earnings. So let's go ahead and try it on your own, and I'm looking forward to seeing how you do.